Welcome. Today, you will learn what a bond is and why it plays a key role in financial markets. A bond is a debt instrument created by companies or governments to raise capital. The bond buyer lends money to the issuer and, in return, receives regular interest payments and repayment of the nominal value at the end of the term. When you buy a bond, you lend the issuer a certain amount of money. In return, you receive regular interest payments, better known as coupons. At the end of the term, the nominal value of the bond is repaid. There is a wide variety of different types of bonds. Government bonds, for example, are issued by governments and are considered very safe. Corporate bonds are issued by companies and often offer higher interest rates, but they also involve higher risks. Municipal bonds finance local projects, and high-yield bonds, also known as junk bonds, offer the highest interest rates with the highest risk. Bonds offer investors many different advantages. First of all, they are certainly a very safe form of investment. Additionally, they provide regular income through interest payments and help to diversify a portfolio. Furthermore, bonds are also a very effective way for issuers to raise capital. They enable companies and governments to finance major projects or refinance outstanding debt without an immediate increase in equity. Like all investments, bonds also involve some risks. Changes in interest rates can affect the value of bonds, and there is also a so-called credit risk, meaning that the issuer could become bankrupt. In addition, inflation can also reduce the actual yield on a bond. Overall, bonds are a very versatile form of investment that offers regular income and is available in various forms and risk categories. They are certainly a valuable component of a diversified investment portfolio. Thanks a lot for watching. We hope that you now have a better understanding of what a bond actually is. If you have any more questions, please do not hesitate to contact us. So long. AURAC AG, where quality meets reliability.